Hello guys, today's video is about a company that just reported earnings this last week, Intel. Intel is one of the biggest semiconductor companies. A lot of people are questioning if Intel is a value play, if it is a value trap, if it is a falling knife. If you want to know about Intel, just stay tuned and watch the rest of the video. So let's talk about Intel. Intel is one of the biggest semiconductor companies in the world. They manufacture their own chips. They have been losing ground in the last year to AMD and even Nvidia. Nvidia and AMD are the favorite among investors, and Intel sometimes are neglected. But Intel has been a value play since 2 years ago, even when they were at $40 and $50. But in the last year they have been going down. We might have hit a triple bottom. Intel was trading in the last year around $25, yes, 26, and even this year after they reported the last report and they cut the dividend, the stock hit a bottom of 24.90 cents. So since then the stock has been recovering. This year is up 16%, but they are trailing the other semiconductor stocks. Even though they are up 16%, the other semiconductors like AMD, Nvidia are up a lot this year. So there are a lot to talk about Nvidia. Let's start it. Nvidia is $130 billion company. They are trading at a PE of 16. That's an IPE now because their earnings are really low. Last year they have one of the worst years. If you look into their revenues, their revenues are down 20% in the 2022 year, and for this year they are expecting their revenue to go down even more, around 20%. Their analysts are expecting their revenues to go to around $50 billion for the 2023 year. Just to remember, in the 2021 year, they hit almost $80 billion in revenue. So this is a company in decline, but they just report one of the worst quarters in their history. The revenues are down, their profits are down, their margins are down. So we might have hit the bottom of the stock. That's what Pat Gelsinger are saying to the investors. But that can be a turnaround story if you like, and if you are an investor in Intel, you are hoping to a turnaround. Pat Gelsinger have said that they did a mistake not improving their manufacturing capabilities and trying to go with the TSM, but now they are investing and they are trying to improve their manufacturing capabilities, and that's expecting that around 2025 2026 they'll be close to the TSM in their manufacturing capabilities. So the revenues are down. This year might be the bottom. From here and now they are expecting to grow. So I do believe in this story. I don't believe that's a value trap, and I do believe in Intel because I do believe in the semiconductor sector. So I believe with all the technology advancing we are experiencing, semiconductors will be in high demand for the next year and for the future. So AMD will grow, Nvidia will grow, Intel will grow, and TSM will grow. But Intel is a company in decline. I do like their margins. I do like the fact they are vertically integrated. They manufacture their own chips. They can have higher margins. They have been having really good margins. Their net margins are around 30%, 26, 25, but last year was a really bad year, and we are expecting them to have a few more bad years, and that might be the turnaround. I'm hoping on that. I do believe there are a lot of investors who don't like Intel. If you invest in the $40, in the $50, you are down a lot. I do like the company. I'm an investor now. I just bought the stock last year, but I did bought around $27, $26, because I really want this company, but I really want them really cheap. And even though I bought that cheap, it's gonna be difficult for the next years, and I'm betting on the turnaround. So I do like Intel, their gross margins, and they are a big beneficiary of the CHIPS Act, and I do believe in their comeback. They just got their dividend. Last year their dividend was around 4%, 5%, but now it's just only 1.6%. But I'm betting on the turnaround, and I believe they can start growing again and being a good competition for AMD in the processor units, and even on a good manufacturing company for the future. So things I like. The revenue have been growing, but now the revenue is down, which will be across for the next year. They have good margins. They have low debt, but that starts to be a problem. They are investing a lot. Their long-term debt are increasing. They still have some cash in hands, but they are negative now. It's not the robust balance sheet we are used to in Intel. They had a really robust balance sheet in the last year, but now it's starting to weak. So their return on invested capital have been really low in the last years. So they started to invest now in the company. I hope they can turn it around, and hope their return on invested capital starts to grow again. Their moat and competitive advantage is starting to decrease as well, but this is a turnaround story, if you want to believe it. But they have been free cash flow positive in the last year. They are returning capital, which is good, but this is a company in a bad year, and they are hitting a bottom, or maybe not, we don't know. The stock can go even lower. I don't have the answer for you, but if we have a recession, another bad year, the stock can go lower, but that's a really good company. I hope the turnaround comes in hand, and let's talk about valuation now. So the revenues are expecting to be around 20% down this year, and in 2024 they are expecting to start growing. That's a turnaround. So for my base case, I'm expecting after the revenues going down this year 20%, and I'm hoping they start to increase their revenues, and might hit 100 billion in 2023. So I will assume a 10%. I know it's high, but bear in mind that we are not starting from the 80 billions we had 2 years ago. We are starting from $50 billion this year. So I'm expecting them to hit $80 billion only on 2028, and I do believe they can hit that even before, around 2026, and then growing maybe 6%. But for the minute, I believe that's my base case: 10% for the next 5 years, and 6% after that, a PE of 15. Their margins, I'm betting their margin can be around 35%. In the years before, they had margins of 25, 27, 29%. But if they start to manufacture chips for other companies, I do believe that they can improve their margins and their revenue. So for my bull case, I'm expecting 12% for the next 5 years and 8% for the last 5 years. 16 PE and 28% margins. For my bear case, 6% growth and 5% for the last 5 years at 13 PE, 22% margins, which I believe they can do it easily. So in this bear case, bear in mind that they will just hit $78 billion in 2033. So they will just hit the oldest. They are not even hitting their record revenue at this year. So that's really conservative. So with that in mind, we came with an intrinsic value of $31 just because I put their net debt, which takes $5 per share in there. If we didn't put their debt, our intrinsic value will be around $35. And if you look at 10% discount rate at all our cases, I believe our intrinsic value will be around $42. So I came with a lower value. For me, that's what Intel and the risk with the company means. So for me, I believe the Intel worth is around $31. I bought Intel at $27 and $26 last year. I'm not expecting to buy more. I might buy more if the stocks turns really cheap around the under $25. That's just what I want, and I do believe in their turnaround. I really like the company, but their competition is really good. The AMD has really good processors. They are trying to get into the graphics processors units, but Nvidia is really strong. They are trying to compete with TSM and Samsung in the manufacturing of chips, so that's gonna be difficult, but they are a big beneficiary of the CHIPS Act, and I do believe Intel is really cheap. Maybe a value trap, we don't know. Let's see what time comes. But I do believe in the company. It's a really good company, but it's a company that I want it really cheap. I might increase my positions in Intel if the stocks comes under maybe $25. So until then, I will be waiting and hoping Intel does well. So that's just my opinion, and I hope you find it useful, guys. And if you liked the stock analysis, please subscribe, and see you next week. Bye, guys.